You're essentially doing exactly what the solar business, by taking people off the grid and privatizing their own production of electricity. You're just doing it with wastewater.
Yeah, so what's interesting is that unlike the energy companies, water districts are not resisting it. They're like delighted, like great. Like, oh, you want to take your local Amazon warehouse off the grid? Great, because they're in a situation where they're really dealing with water scarcity, overstressed infrastructure. I just saw a headline about some utility was unable to clean out some dioxane, and that got into the water supply. Well, why did the dioxane get into the system? Why not just make that polluter do it offline and treat it properly? And that solves it for everybody. We can really get these businesses off the grid. We're doing a private utility gig. And the good news is that the water industry is appreciative of that. They're happy to let us do that. The whole idea of decentralization is really taking off. First of all, in built-up places like many metros in the US, where are you going to put the large plants? Self-contained water treatment is where it's at. All right. Well, welcome everyone. And here's another briefing. We're going to dive into some really fascinating stuff. Water the Blue Gold, Thursday, November 9th, and a couple weeks from Thanksgiving. Briefing number 236 in the series. So first of all, a comment on the economy, because that's important for us middle-class investors. It's getting harder and harder to come by middle-class investments. Take, for example, the income needed to buy a house. Well, it now takes $111,000 to afford a house, assuming the payment won't exceed 30% of the buyer's gross income, which I certainly hope it wouldn't. But median household income is only $78,000, right? Which is 30% below that threshold. Now, just 3 years ago in 2020, you only needed $60,000. Think about that. We've gone from $60,000 to $111,000 to afford the same house. Now, what does it mean? Well, let's take a look here. 85% rise in income in 3 years. The gap between median income and income needed to afford a house is 25% larger than it was in 2008. So what's the long-term plan here? Well, we know that large developers are getting into rental-only developments. I think that there's a plan to get us into rental-only developments. But here's the issue. Number one, there's been inflation of real estate values. Number two, interest rates have skyrocketed. Now, you know, 8.5% mortgage is not uncommon. I think that Ken purchased an income property for like 7.5% mortgage interest, which actually it still works for him because, again, the rental market is actually growing. And strangely enough, the rental market in the Tampa area is actually more expensive than the rental market back in Los Angeles. That's the crazy part. A friend of mine looked it up, and she looked at her old neighborhood. I think it was in Tarzana. It was like, wow, Tampa is actually more expensive. So what you have is desirable places have very high demand. That's great, but the rise in interest rates makes it harder and harder to get a home. But here's the most interesting part. In Florida, flood insurance is going crazy, and this is going to happen throughout the desirable coastal communities. I've heard a rumor that there are homes in Miami that are incurring $120,000 a year flood insurance bill per home. And insurance companies they're the ones that really drive everything. The governments can be bought, but insurance companies, they're stuck with paying the bill. So they're harder to buy off. In my condo development, we have a for 2024, we had like a $220,000 increase. Well, no, sorry. The insurance is $220,000, but that's spread over 87 units. So it's doable. But with what's happening in the floodplains with individual homes, now only the rich will be able to do this. What this means, I think, is that it's going to slow the velocity of the real estate market, and it's going to turn into a renter's business, which is fine. Long story short, access to real estate as an investment for the middle class is dropping. Okay, let's continue here. The Panama Canal, check this out. You're going to find this fascinating.
The driest October since at least 1950 has left the Panama Canal with too little water to support the massive cargo ships that are critical for global trade. The Panama Canal Authority is again slashing the number of ships that can cross each day and reducing the weight they can carry. Typically, about 36 ships can pass per day, depending on weather and water levels. In November, just 25 approved ships will be allowed to pass through. Because El Nino typically causes drier conditions in the region, officials have plans to further reduce shipping transit in the coming months. The number of ships allowed through will continue to decline through February until just 18 are allowed passage each day. It's a major blow to the shipping industry, which uses the shortcut between the Pacific and Atlantic Oceans, with the highest number of goods shipped between China, Japan, and the United States.
The point is that we're starting to see these knock-on effects from droughts. Last week, I talked about drought, the Mississippi being at a low level, and I promised that I would interview Tom Marchicello. That's actually been pushed off to next week. He's been doing some research into the corn and soybeans market because they rely on water in all kinds of phases, not just for irrigation. So we'll be covering that. But here's what's going on is we have all kinds of areas that are suffering unexpected drought. You know how the Panama Canal works. I was a ship captain when I took a ship through the Panama Canal in 1976. And the whole concept of the Panama Canal is that you have water constantly running into the canal from mountains. So it's a lossy type system. Huge amounts of water flow down into the Panama Canal. And these locks, the way they operate is the water just kind of rushes out, right? And it's managed by the locks. So there's a relatively little pumping going on because they're using gravity. Well, that means you got to have a lot of water coming in from the mountains. And when you lose that, then all of a sudden you got a problem. So it was very interesting taking a ship through the Panama Canal. It took 8 hours. It's huge, huge, huge public works. But it's sensitive to this kind of thing. So this, according to this, we have, this, now it's dropping to where there's only going to be 17 ships a month. That's ridiculous. You know what is going to happen? Ships are going to start going around Cape Horn again and around the Cape of Good Hope. It's going to become more viable than trying to get through the Panama Canal. So interesting stuff. Gene Tully, showing your age, Riggs, the canal was just built. The Americans built the canal before I was born. Just want everybody to know that. All right. And then I have another comment here. Let me just expand the chat a little bit. From Keith, when I started working, anyone who made over 100K was super rich. Now you need more than that to afford a house. Well, 100K is basically $1 million. I mean, when you started working, Keith, it was about 12 years ago, right? But when you started working, I think it was probably 10 to 1. The dollar was worth 10 times what it is today, is my offhand guess. But it's dramatically going up, as you all know. I go to Costco and week after week, like, oh my God, what just happened to that price, right? Just boop, popped up. Okay, let's continue. So that's yet another one of those markers, shall we say. The World Economic Forum in Davos in 2022 actually met about water. And I'm going to play a little clip from their press conference. I think we can get some interesting conclusions out of this. Let's take a look.
That's also, of course, true with COVID, right? We are all only as healthy as our neighbor is on our street, in our city, in our region, in our nation, and globally. And did we solve that? Like, did we actually manage to vaccinate everyone in the world? No. So highlighting water as a global commons and what it means to work together and see it both out of that kind of global commons perspective, but also the self-interest perspective, because it does have that parallel. It's not only important, but it's also important because we haven't managed to solve those problems which had similar attributes. And water is something that people understand. You know, climate change is a bit abstract. Some people understand it really well. Some understand it a bit. Some just don't understand it. Water, every kid knows how important it is to have water. When you're playing football and you're thirsty, you need water. So there's also something about really getting citizen engagement around this and really in some ways experimenting with this notion of the common good. Can we actually deliver this time in ways that we have failed miserably other times? And hopefully we won't keep failing on the other things, but anyway.
Maybe just to add a further point on the costs of all of this. At first glance, it may sound like this is costly because you're going to have to raise a lot more money. The world will have to spend about $300 billion per year in order that low and middle income countries can solve this problem, that the technologies can be scaled up so that everyone has access to clean water and safe sanitation. That sounds like a lot of money. But we today waste far more than $300 billion. There's the economic cost of what's happening today is far more than $300 billion. The neglect of water costs far more than $300 billion. So all this is about governance systems. How do you value water? How do you stop the wastage? How do you improve farmers' incomes using drip irrigation and other techniques? It's actually about saving money, but you've got to mobilize resources in order to invest in the technologies in order to save money and allow people to have better livelihoods. I mean, just to give two examples, a very large amount of water globally is wasted every day in the way in which municipal authorities run water utilities. A phenomenal wastage of water because it's not being valued, priced or valued properly. Plus the systems of governance are not in place. As a result of another example, as a result of a lack of access to easily accessible water in villages across a large part of the developing world, women in sub-Saharan Africa, for instance, many other parts of the developing world as well, spend a few hours every day going out to get water or firewood every day. If you can make it accessible, imagine what they can do with that time. So there's a huge loss of livelihoods that comes out of what's a very inefficient system of managing water. Stop the wastage, help people have a better livelihood, quite apart from a better quality of life. So when we think of cost, yes, it'll cost something, and the world has to pay for it, but we're actually going to gain a lot in economic terms, which means individual lives, communities' lives will be much better off. Net, we're going to be saving money.
We're talking about a couple different things. First of all, this gentleman is absolutely right that there is a tremendous disparity in access to water. He talks about three different things. We got to value water, put a value to it, don't waste it so much. The problem is that places where there's lots of water have a hard time getting it to places where there's not a lot of water, right? Because water is hard to transport economically. Secondly, he talked about reducing waste. And thirdly, he talked about educating farmers. That's all great. I think that the problem really is that we know right now that the U.S., which is a developed country, never mind the people who have to walk 10 miles or 5 kilometers to get water. That's a horrible thing. But we all know that. That's we understand there's problems in Africa with wells and so forth. But what about the U.S.? Well, we are underfunding by $100 billion every single year. So the problem is much, much more widespread. And I think that there's going to be efforts to improve water access for the less wealthy populations, and it's a good thing. But everyday populations in our current culture here are having problems accessing water. They are themselves being locked out of water access. The water problem is not just in Africa. The water problem is just down the street right here in Pinellas County. So that's where we have to really think about or act on this way of enabling businesses to self-treat so that they can take care of their own dirty water and thereby free up the municipalities to do the right thing, to help the less fortunate and so forth. So in just about every country, there is wastage, as this gentleman pointed out. And most of that wastage comes from the biggest users, which are industrial and agriculture. So if we can fix that, then it's much, much easier to take care of the people. And they won't have to walk 5 kilometers, or in America, they won't have to lose their access to water because they didn't pay the bill. All right, well, that's my little soapbox, shall we say. Let's take a look here. Now, earlier today, I teased everyone on this periodic water table. Well, there's actually somebody very smart created something called the periodic table of asset classes. And I was very interested to see where water was in that table. Those who follow my my Twitter account, Riggs Eck, saw me post about this. It's also on the OriginClear Twitter account. But let's take a look anyway. Well, I know Ashton Martin through my good friend Alex Lightman. He posted this and he said, when science does investing, you get a periodic table of asset classes. The darker the color, the higher risk. And the more on the right the asset is, the less liquid it is. So let's take a look here. Here it is. So what we have here is the far left, we have currency, which is the most liquid. And the far right, we have collectibles, which frankly are very illiquid. They're good for taxes mostly. Also, they're good for losing money, like at the very bottom right, racehorses. I know people who have, it's the best way to lose a fortune is to get into the horse race business. But anyway, then we go commodities and infrastructure, and right there, water, number 86. Okay, so what does that say? That really says that it's high up on the chart, which means it's not so risky, but it's kind of far to the right, which means it's relatively liquid, but it's more liquid than those gold coins you have in your safe, right? It's more liquid than crude oil, right? Safer than crude oil and energy. So, which is interesting because we think of energy as a very profitable business, but it actually, according to this, as an asset is not that liquid. All right, now, just to the left of it is real estate. Industrial at the top, going down and all the way down to raw land. I would think that commercial these days is much riskier due to the post-COVID problems of empty offices, but nonetheless, you can kind of see how this all works. Now, this is what I think we can do with water on demand. Take a look. Just first of all, just to explain this to you from left to right, most liquid, least liquid, from top to bottom, least risk to most risk. Okay, so let's take a look. Here's the chart. Water on demand monetizes water, so it ends up being more of a structured product. A mix of a structured product. Here we go, interest-linked products. And right there, we might even push it more to the left because it's dividend-paying stocks. In fact, I think that probably does fit there. So, but you see how we can push it over several columns. More liquid than real estate and roughly in the same risk column as residential real estate. So remember, horizontal is risk, vertical is liquidity, how liquid it is. So this is interesting. So I think that when you think about it, it really is a revolution because what we're doing is redefining this asset called water. Fascinating thing. All right. I'm going to play a quick podcast only because I keep pushing out these darn podcasts and they're good, so here we go. Our water infrastructure is in deep trouble, and it's being underlined by these little canary in a coal mine events like Flint, Michigan, and so forth. But there's much more happening that is just not being talked about. There's a real estate boom going on in North Texas, between Dallas and the Oklahoma border. It's going so much faster than putting in utilities. They're not even trying. So here, to me, the solution leapt out to the infrastructure problem, but also the opportunity, which is we're going to have to unburden the grid. We're going to have to take businesses off the grid and make them do their own water treatment. It's called decentralized water. It's going to relieve the central grid because they're not getting the money anyway. And who's going to build a big sewage plant here in Pinellas County where it's already overbuilt? So not going to happen. So just relieve the burden. Make the industry and agriculture players do their own water treatment. And Bob's your uncle. Now, what's interesting is they like it. That's what I learned, and that's what's propelling the boom of our company today. Like we get, let's say a brewery is being forced to truck half its water to another county because the local utility won't take it. And so they're forced to do their own thing. But then they go, oh, this isn't bad because number one, I can control the water rates. Do you know that water and sewage rates are inflating at the same rate as college tuition?
I did not know that at all. No.
the high hospital services. Next below that is college tuition, and water is right there with it. So it's hurting people, but it's also hurting businesses. And they're like, okay, so if I do my own water treatment, then I can control costs, right? Because on the water treatment side, I don't have to pay sewage rates. I'm permitted to just, dump it into the groundwater, which is perfectly good. And that way it recharges the aquifer. Everything's great. On the incoming water, since I'm able to recycle, I'm paying less incoming water fees as well for the potable water. And thirdly, there's less regulatory noise from the city. I'm on my own. It's great. So those three reasons are big drivers. And that's propelling that finally a change is starting to happen. Water companies generally grow at only like 10, 15% a year. We're growing 2x, 3x per year. We're doubling and tripling per year because of this wave. And large companies like PepsiCo has committed to 80% recycling of their water. Well, you can only recycle if you do it your own treatment. If you send it to the city, it's never coming back. So that's the breakthrough. And then we had that breakthrough coming into the COVID, and then COVID hit. And at the time, this is February 2020, we saw the first crash of the price of crude, and we're like, oh, there's a problem. Wuhan closed for a month. We got a problem. And this is before the lockdowns. This is before the CARES Act, all this stuff. And we're like, this is going to be a real problem. And people are going to run out of money. And so we came up with the idea of water as a service. Like, we'll install that system in your business. We'll continue to own that piece of equipment. We'll maintain it. And you just pay by the gallon. And that became water on demand. That was the last piece. So that's today what we have is decentralized water with these compact systems called modular water systems combined with the capital solutions. So it kind of works like GM and GM Financial. Because we operate more in the mid-band, $500,000 to $2 million systems, they have to be standardized like hotcakes. They can't be this, we'll take, 2 years to install your system BS that goes on, which means that we have a scalable business and we can ramp it up. So that's the exciting moment we're in right now. We're starting to move the needle.
Yeah, that's very niche, I would say, as far as a business model goes. I don't know if you thought, if you could, go back in time, did you think you'd be working in something like this specific? At least I think it's very niche in terms of, it's something like you mentioned earlier, you just turn the faucet on, the water comes on. Like I don't think about it really probably on a day-to-day basis. It's something I almost just take for granted, the ability that you have, water that just works. And I'm actually a little nervous to look up my zip code on there. Not that I would think it has anything weird about it, but I live in downtown Rochester, Minnesota. I'm hopeful that we're pretty good. We're right next to Mayo Clinic. We're treating people for a variety of health conditions. Hopefully we're doing a pretty good job. But yeah, Riggs, I think another aspect that got me thinking about it is your company is public, right? So you could invest in the company's stock, but are Americans able to invest in water projects like this, or can they invest directly in, a type of water project? Is that possible?
Sure. Well, OriginClear has been a small public company for 14 years now, and it's listed. You can invest in it. Great. But in addition, what you can do is you can become an investor in these bundles of water projects that we put together because if I make it free for the brewery owner, well, who pays for the machine, right? So what we did was we decided to emulate the oil well master limited partnership model, which regular investors can get. Each of these MLPs, there's about 60 of them, $300 billion market. It's not niche once it grows. They can invest directly in that. And each one of those MLPs is a basket of properties, pipelines, gas, oil, nicely diversified, and they get royalties. And that's a really good model. So we decided to emulate that. And so water on demand is that. And you can invest in what we call water like an oil well. And what's great about it is, in addition to getting stock, because we do that, stock in the public company, but in addition, you have royalties and a lien capability on the equipment to enforce your royalty, which makes it asset backed. So that's a really interesting model. People like it a lot. It's interesting because early stage booms always start at a level that is like, I remember in 1993, there were these weird internet utilities. It was nothing much. It was kind of like, I think one had a name of an animal. I mean, it was like these weird things. It was not until Mark Andreessen's browser came along that it just kind of like blew up. Well, so it's very deceiving. You think that this is nothing, but that's precisely when you want to look at it. It's not too early. 10 years ago, it would have been too early, but now it's starting to ramp. Back in May, there was a first unicorn in a long time in the water industry, and they are doing this decentralized water treatment for large companies. They have Merck, they have all, the big food and beverage companies and so forth. They're very prestigious. They manage, they have fund money behind them. That's great. It's a good business. There's only so many of those, right? But there's many, many more of the middle class of water treatment, which is where we like to be. So that's an indication that water tech is taking off. Now, the decentralization thing is interesting because anytime you have something goes from centralized to decentralized, you have a huge boom in the economy of that thing. For example, AT&T broke up, and it resulted in all the baby bells and MCI and VoIP and eventually the internet, all of it. And it all came out of this one just dislocation that occurred. When it's all monopolized and centralized, it doesn't move. It doesn't develop. People like you and me don't get involved because it's a dull job. Well, I'm going to go work for AT&T for 30 years. Right. It's not to denigrate AT&T. They delivered very good tech, but the monopoly concept was bad, just as a monopoly concept is bad for water. Here's why. In Ireland, water is free for people, for regular people. Why isn't it free here? Well, because 90% of the use is by industry and agriculture. We get those off the grid. Now we can start relieving the burden and servicing people properly. I meant to ask you, Eric, what is your zip code?
55904.
All right, let's
take a look at it.
Yes, sir. There's a few subdivisions. Which do you know? Briarwood, Byron, Chester Heights. There's a bunch. Wow. Rochester. I'll take
there.
Rochester.
It is. Yep, Rochester right there. Yep.
All right. So what I have 9 contaminants detected, 20 total, but 9 exceed the health guidelines. So what are they? Well, you've got bromodichloromethane, which is 12 times. Now, the utility, of course, is compliant, 0.725 parts per billion, but EWG has determined it's 0.06 parts per billion. So that's 12 times. Haloacetic acid is 28 times. Another one is 94 times. So they exceed guidelines, right? Now, there's only 9 out of 20 others that are fine. Toluene, fluoride, dioxane, they're good, right? That's the problem that we have. So these utilities will be able to focus on this more because they'll be servicing the regular people. They'll be unburdened, and water rates don't have to keep skyrocketing. There's a serious default rate by people not paying their water bills and being cut off. And now you got to go get your water in a bottle. It gets even worse, right? So this is, to me, a social justice thing. We've got to get industry off this central grid so it goes back to servicing the people.
Yeah, and you mentioned decentralization versus centralization. So that got me thinking, in terms of maybe the blockchain or crypto and different ways that, in the finance space and the asset-backed space, how we're kind of seeing that more and more and more. And you are actually you're pioneering some water stable coins, are you not? In terms of being able to have an asset that is backed by water. Is that something that you're currently working on?
Yes. Well, in 2018, when things were kind of wild and crazy, I pioneered something called Water Chain, which was a blockchain solution. The problem that we ran into was a very simple one, is that there's no standardized price for water. It varies widely depending on jurisdiction. So how do you get a market? And it wasn't until we developed Water on Demand, where every single gallon is paid for on these operating contracts. You start multiplying those, and then you clone Water on Demand to different regions. So you have a Water on Demand. We wouldn't do it, but we'd have a finance partner in Singapore, for example, do it for Singapore, et cetera, Singapore, Malaysia. And you start multiplying these water on demands, and now they're all equivalent because people are paying in the local currency roughly the same amount of money per gallon that they would elsewhere, because it's the same base cost. It's no longer based on the scarcity of the resource, which is why Colorado River water, varies by 10,000% depending where you get it from or whose rights you have. That goes away, and you get a pretty level playing field. And the reason why there's no international water market or even a national one is because of that problem. If I have a water problem in Northern California, I can't buy options on Singapore water. I can't do it. I can't hedge my risk. But under this new model, we can. So that's where we're moving towards. What I felt was important to do was like, let's get our basic business going. Let's proliferate that. Blockchain can't operate in a vacuum. It's like, well, what are you blockchaining? Well, I have a cool concept and everybody should like join it, and we'll go to the moon, and everybody gets screwed by like Sam Bankman-Fried did. No, this is not. The new model is to create something that has solid backing, is asset-based. For example, we can take these dividend payments and tokenize them. That's a great idea. But for now, ACH is just fine. And here's a final issue with tokens is that the SEC doesn't like them. And I'm regularly going to the SEC to get registered for various offerings. And the last thing I need is them to go, what's this token you got? And are you marketing a security? And I was like, you know what? We're just going to hold off for now, and there'll be plenty of time. So I think there's a future in water stablecoins. But as I say, job one is to establish the base business.
Yeah, I think that's right. And it's probably a smart play to be nice with the SEC as of right now with all the touch points you have with them. But Riggs, yeah, I mean, this is all very interesting. I think that a lot of people listening probably are thinking like I am in terms of you're clearly like disrupting something that is, has been stagnant or has been steady for a period of time. And that's exciting for someone hearing that as either an entrepreneur or someone that's aspiring to maybe start a company of their own. Do you have like maybe a blanketed statement of advice for someone that wants to disrupt? Or is there is there something that a person could maybe look for if they're not certain of what area they want to disrupt in? Yours, obviously, you shared your story with us and kind of how you got to where you are. So there's obviously some natural, play to it. And there could be, a combination of hard work and luck that leads you to an opportunity. But yeah, just kind of as a general statement for someone that wants to disrupt, what would your advice be to that person?
Well, I think where I've given myself a hard time with disruption is where I've gone in to a space without a thorough, infiltrated knowledge of it. I remember in the early 80s, I started a business in New York City selling business computers, first generation business computers. And the first one I sold, I did not even know where the on switch was, right? I was like, how complicated could it be? And I found somebody who was interested in buying a computer. And I said, and they go, well, let's see how it works. I'm like, wait, where's the on switch? So I don't advise that. That caused me a lot of. I was then learning. I had 12 people on a New York City payroll, Manhattan payroll. It was royally painful. So I learned on the job, but it proved to be actually one of my toughest learning experiences. I literally gave up on that business and handed it over to a guy who did a great job with it. But that was a learning experience. Like, okay, get some familiarity. You got to have that. And that's the number one thing. Now, having done that does not mean you have to take a 20-year job with a Fortune 500 corporation. Just get to know it, try to apprentice in some way, get up to speed, and try things in a microcosm as a side gig or whatever, and then jump into it. At that point, I advise just go for it and do the rest of the learning in the pool.
Yeah, and would you say that was a example of the mistake-based marketing initially, like kind of that learning from that failure, so to speak, before, you developed, your skill set to be able to get to the next step? I mean, if you didn't know where the on switch was that time, that certainly wasn't going to be probably a mistake that you were going to make again in the future. You were going to have done your research, right? Is that kind of
mistake-based marketing is just consciously trying things out in the market, and presumably you know what the heck you're doing. The reason why I gave up on that business was, again, because of a lack of really being in the business deeply, because what I didn't realize was I was creating first-time business users of computers, and it was incredibly tough, hard work, et cetera, not really profitable. But what I didn't realize is there was a life cycle of supporting these people for 20 years that is incredibly rich. And that's what my buddy Juan, he took this over, and he made it that business. To this day, he has clients that we opened together in the 80s in New York City. That's an incredible amount of annuity, and that's what I didn't fully realize. So that's why it's so important to have, really embed yourself in the industry. I think it's super important.
Yeah, and building that skill set and probably finding out at the same time what is igniting you, what is fulfilling you or fueling your passion, so to speak, to want to work more on those things. So obviously entrepreneurship has been a big piece of that for you for the extended period of time, and leadership as well. And you mentioned pre-interview that, you're getting ready to even start your own podcast. So that's extremely exciting, and wish you the best of luck on that. And Riggs, as we kind of close down, just one last question for you. Is there a myth about entrepreneurship that you want to debunk on the podcast today? Something that maybe is widely believed to be true, but you have found out this is not the case, and you want to make sure that people do not, fall victim to that false belief?
Well, I think the biggest myth out there and it prevents people in corporate America from making the jump, even if they're frustrated. And that is that it's the uncertainty, right? I was listening to an interview of Matt Taibbi on Joe Rogan, and he said, I'm being paid many times what I was paid at Rolling Stone, many times, because he's on Substack, and it's got this great, Substack did a great disruption of the publishing space. And so he's doing really, really well. So it is not impossible. I have a nephew who he cracked the code on Amazon selling. He's freaking brilliant. It's not something I would do because it's not what I am, but he did it. And this stuff is doable. It's hard to find a niche and something you love and get some traction in it, but it's not as hard or as risky as people think to develop the business and get into revenue.
Very sound advice. Really appreciate hearing that. Kind of ignite my fire, so to speak, as we close this episode. And it just dawned on me how appropriate the name of the company is, OriginClear. You're dealing with water. You're also extremely transparent, and water is transparent. So it's all coming together here at the end, Riggs. So again, can't thank you enough for being a guest on the podcast today. We'll look forward to keeping up with you in the future, and best of luck with everything, sir.
Eric, it was a lot of fun. I really appreciate it. Keep up the good work, okay?
Thank you, sir. You too.
Some interviewers just bring it out. I start rambling about my past, as a ship captain. Lots of fun stuff. I'll continue this interview next week. And one of the things that is really clear is that I was accustomed to, regardless of how well I did it, I was really, really involved in a lot of change happening in the 90s, early 2000s in the tech industry. It's still changing rapidly. And I fell into an industry where there was not a lot of change. It was very static. And going back to the periodic table of water as an asset, it's considered relatively illiquid and relatively unrisky. And so we push it over into the more liquid category, make it a tad more risky perhaps, but much more liquid. Well, that's a good thing. But think how long it took for us to get there. I mean, Ken and I, we have been working on this for a long time. This new model, water on demand, and finally getting it with the help of our incredible investors, getting it to the point where we literally have packaged this to be a player on the NASDAQ, potentially, no guarantees, as always. But this is the thing, right? This is ours to lose. And so we are, going to be a mid-market player in the water industry that has a transformative business model that enables investors to invest. I'm blown away. But anyway, that's what came out of that particular interview. It was super cool. All right. Well, you know what's coming next? Oh, yeah, you know it. Here it is. The freewheeling discussion.
No one escapes the freewheeling discussion.
That's right. That's exactly right. It's funny because the background, when you're not there and boop, you pop in.
Our weapons are fear and surprise and ruthless efficiency.
Ooh, I like it. Then Ken all washed out.
Yeah, I'm working on it. I'm getting there. So, it's funny. I did the EWG.org thing. So it has 18 total contaminants, 9 exceed EWG health guidelines.
What's the zip?
15632.
Let's take a look. All right. Westmoreland County. Let's take a look at 150,000 people. So 9 exceed the guidelines. Here we go. So you're
God, 140 times. Oh my God. I didn't go down that far. Good Lord.
I told you stop. Stop
240 times the safe limit. 600. What is halocetic acids?
Well, here's the interesting part. There's no legal limit for chloroform or any of these that hasn't ever been updated, right? Haloacetic acids does have a legal limit of 60. This utility is at 24. EWG says, no. Current science is 0.1 parts per billion.
Right. Which is
Nitrates.
slightly less than what they have, right?
Here's fun. Here, nitrates, right? I try to buy bacon doesn't have nitrates, but here it is in the water, for God's sake, right?
Right.
So this utility is at 0.514, which is beautiful compared to the legal limit. But guess what? It's still 3.7 times worse.
This is not worse than most communities, right? This is on par with most communities. Now, we do happen to have quite a bit of fracking and natural gas extraction in this region. Most of Murraysville on the eastern side of the town where I escaped from is mined like crazy for coal, right? And most of the homes today sit on mines. I moved out to where there's far less of that, but I think that probably plays a big part. Dibromochloromethane. That sounds good for you.
Yeah.
You put some of that on your tuna sandwich, right? It's a non-flammable compound. Well, that's good.
It was formerly used as a flame retardant, which is probably how it got into the water table.
Right. Yeah. So this is,
So just drink a good glass of water before you have some Taco Bell. You'll be fine.
Well, I tell people, I like my kids order. I go to the restaurants in Murraysville. Would you like water? I'm like, no. And they look at me. I'm like, let me get bottled water or seltzer, please. And this is why, right? You don't want the kids even drinking the tap from the restaurant. So, yeah, it's bad. I tell you what, on that podcast, there was a lot of nuggets that I think we should extrapolate on, and kind of magnify, because there was a lot of, you guys moved from topic to topic pretty quick, but it was really good stuff.
Well, what I think is really important is to think about, if we're transforming water, we've had to do a very heavy lift to get it into a transformable mode. So now we're executing. I think we've pretty much locked the model. It has not, wow, Ken, it has not changed in like a couple of months. Crazy. The model.
Yeah, now that you said that, you're going to go, Ken, I have to talk to you in the morning. Or I'll get a ping at midnight. Are you up?
Oh, that's funny.
Yeah, sure. Right. Yeah, it's all good. No, and I'll tell you what, in fairness, the reason the model hasn't changed is because this is where it's supposed to be, right?
No, we are, this is locked and loaded. The Series Y offering that we have is perfect. It's been running since November 2021. And during which time we've raised $8 million for that, in addition to the money that Ken and team have managed to raise for the merger. So it's amazing that we've raised that much and still done the merger as well. But anyway, the point is, it's still functional. It still works. The same structure is identical, hasn't changed, which is good. So the only thing that's happened really is, let me think, the interesting part that's happened. Since 2021, our operations divisions have taken off. This is something we did. And you and I in 2020 were facing the fact that there was no motion in the ocean. Like, hello, can you guys grow? And then they freaking took off. PWT, Progressive Water went from 2021, they were at 4 million, and they doubled to 8 million. And then Modular Water came from a very, very low level up to like 2 million. And now they are on target. So though
they're hockey sticking it, both of them. I mean, and look, that's a combination of bringing in a competent team. Not that the engineers and folks that at those companies weren't competent, but having kind of like you said, a ship's captain. Tom's done a magnificent job at PWT, and some of the organizational things that we were able to bring in allowed them to be them, right? Allowed them to really do what they do well. The getting back to the model comment is, if it ain't broke, don't fix it, right? This works. And it universally is understood. I have the distinct, the unique experience of speaking to our actual investors, both prospective and existing, on a daily basis. And with the new people that I speak to, they get the model right away.
Mm-hmm.
And a lot of them say, oh, so this is like solar, right? Or, oh, so this is like energy, What we used to argue about all the time is if you have to spend 20 minutes explaining it, that's a problem. Like if you have to explain the punchline, the joke's not funny. Well, if you have to spend 15 minutes describing the model and kind of different iterations of it, and we haven't had to do that in years. So finally, and look, I will say this as well. The public has woken up to the fact that water is a problem. 5 years ago, I would talk about water and people were like, what's wrong with water? Why do you have to do? And now it's like, oh my God, I can't believe you guys are finally addressing this, So there's been a complete cultural and mindset shift on this that has made communicating our much grander vision far easier. Now, once we've described accurately that this is, and you mentioned it in your interview, industrial, agricultural, and commercial. If you fix it where it's being polluted, all of this downstream nonsense, all of the dihydrochloramine, blah, 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 that's in my drinking water may actually be ameliorated, right? But it's got to get fixed where it's been broken. It's not being broken here. They're simply trying to manage it. If you fix it where it's being broken, there's no management at the bottom.
Exactly. We lay off the problem. Ron Williams asks, Riggs, how can I as an individual promote WOD?
Ron Williams is a new investor. Welcome, Ron. Thanks for joining.
Ron, it's a great pleasure having you on board. AJ and social media expert Josh Wills are working on a water-on-demand social media and PR strategy. And the more people can amplify it and share and like and all that good stuff, there's going to be a lot of it. I mean, right now, the water-on-demand Facebook is like 140 people, whereas OriginClear's got 25,000.
I'm going to take this opportunity to shameless plug right now. If you guys are on social media and you don't follow us and you're here,
please do.
Even if you're not a current investor, if you're just interested, please go ahead and follow the channels. We got some exciting stuff coming up. I mean, we've already had a bunch of exciting stuff happen in the past couple of weeks with the BCA signing, but to the credit, to the credit of PWT and MWS, who are also under the Water on Demand umbrella, they're doing fantastic things. And we're going to be constantly highlighting those things in the news and across social, and really helping you guys to understand better so that you can communicate to your friends, to your relatives, to your coworkers, how we're actually changing the landscape of water and helping to address some of these problems, but also giving them an opportunity to invest in something that's going to be incredibly huge, and do it now.
And to Riggs, so when Riggs was talking about it, how both of those units just went vertical, right? But it was a tree. See, if there's a tree falling in the woods and there's no one there to hear it, it doesn't make a sound. By amplifying the successes that we're experiencing in these individual divisions on social media, now the tree makes a sound, right? Where we start to give these guys with their hard work the very, very much deserved recognition. But it also is able to communicate the story to people. They start to ask questions. Well, what is all this about? So you folks as an audience, retweet, share posts, invite friends to like, right? It's not your it's not your MLM thing that they'll avoid, right? This is real, right? And this can help amplify our message at a really critical time for us. We believe that we've achieved critical mass in terms of getting the company where it needed to be, or very close to do that. But having a very wide public support of our mission can only make it easier, can only make it better.
Absolutely.
Here, for example, is the x.com OriginClear site. So it's twitter.com/OriginClear. And, it's got these articles. Here's one, these are wonderful shorts that are coming out. You should be taking a look at those. That was Newsmax, exactly. Mm-hmm. That what I was just talking about today, you would have gotten the news November 7th, right? So, and this is what I played today, this thing about taking a page out of Solar's book. So, and here's that testimonial that was so powerful. So AI replacing CEO. So this is good stuff. And we're really putting a lot of attention on it. So do join us.
More shameless plugs. Especially if you're on Twitter, because that's kind of where things are popping off right now. Follow Riggs and follow Ken, right? I mean, these are guys that you hear it on the podcast, guys that have, a vast wealth of knowledge across a number of different topics. You're going to see more of that come out as we continue to engage in these conversations. And I invite you to engage in those conversations with us, right? That's part of the strategy for us in terms of really building us up as a, a kind of more common brands, is having you engage in the conversation with us.
Absolutely.
Right? You want to know how you can help?
Dialogue.
Talk about it with us.
Yeah.
Share it with us, right?
Yeah.
If we have something that's interesting to you, tweet at us, right? Or make a Facebook post at us. Right? We are constantly monitoring comments. We're constantly monitoring all these channels because we want more than anything to be able to connect with people and to connect with you across wherever it is that you are, and meet people where the conversation is and be able to contribute to that in a positive way. So you want to know how you can help. It might seem small, but having that conversation in the virtual sphere is amazing.
And I think that this combined with what we're doing in social media and in other areas, but especially this briefing, makes us probably the most addressable and accessible and transparent public company anywhere. I mean, think about having a conversation with the CEO of a public company because you have a question. That just doesn't happen. Right. So this is your time to help us make this shine. Now, Sharon, if you have questions, you should email invest@originclear.com. My support team can figure out where you're at and get you in front of the right person to address your questions.
Okay, Everett said NPR had a story this evening of Arizona's water issues, and the water recycling will be a must. Are we positioned to support that great of a need? All right, here's what we have learned is when municipalities have a problem, that's like the Boeing jet just crashed in a field. Yeah. We can't help the Boeing, but we can certainly help with some of the collateral issues. In this case, what about the businesses and the farms around there? What about the housing developments, right? So we can help. Our model is one in which people can survive, because more and more bad news. Look at the Panama Canal. I never expected the Panama Canal to run out of water. It's built on this model of giant amounts of water coming in from the mountains. That's going away. That's scary. So more and more scary stuff happening. And so increasingly we have to empower businesses, farms, and housing developments to do their thing. Okay, so that's what we're positioned to do, for example, in Arizona. All right, then James Wright. AJ, can you add a question to the Zoom survey and other information areas that we'll ask if you want to be included in the social media links for the company divisions? Very smart. Good
idea.
And we are working on updating the Zoom survey. Kevin, who works with our team and is fantastic, is kind of piloting some drafts. We'll be having some comments back and forth, and you might see a new Zoom survey as early as next week with some new news. So look out for that if you guys are regular viewers. And if this is your first time, this is not a one and done. Come back every week for fantastic new news and updates of what's going on with the organization. And if you can't miss us on here, catch us on YouTube. This is going to be one big shameless plug for social.
Wait a minute. And coming soon.
Yeah.
Rumble.
And coming soon, Rumble. Yeah, if you guys are on Rumble, I'd love to hear it, because that's certainly a platform we want to explore some more and get our voices heard out there as well. Again, this conversation it's not political, it's not segmented, it's a universal problem that needs to be addressed, and we are perfectly poised to be able to help in so many different ways to do that.
So yeah, here, for example, is our YouTube channel. So there's some really, really good graphics that we're starting to use, as you can tell. And what's great is that we have a lot of shorts. So if you're a person who does not have good attention span like me, you can go straight to the shorts. So it's YouTube / at OriginClear, right?
Yes.
So with that, I want to just ask you all to please do fill out the survey, and we will be doing more good stuff with that survey and making it more and more functional. But we really do look at all the answers, and we appreciate it.
And to answer Anya's question, yes, there's going to be a replay that will be distributed via email. That'll happen tomorrow morning, I believe.
Yep.
Also, it's always the same address, OriginClear / briefing replay. Right. The YouTube OriginClear site always has them. But if you are on the Zoom invitation list, you will see the briefing replay come through. Thank you, Anya. And Kevin just posted in the chat the link briefing -replay. That's why I didn't get it.
So copy that, stick it in your browser, because when we close the Zoom, you won't have it.
So here, for example, you can see right here, briefing -replay, and this is the last week's. So this is last week's, and it'll be flipped over into the new one overnight. All right. Again, you don't want to go much past the hour. It's been wonderful having you all, and I'm having so much fun with these briefings. And let me tell you something. I have so much stuff stacked up to report on, and I have to stop. Like, look at this. China foreign investment. They're not investing externally at all.
Wow.
Crazy, huh?
Right.
Their inflow went negative in Q3 of 2023. So that kind of stuff, I have tons of it, but I just have to stop. So with that, I will stop, and I will thank you all for coming. It's been great. Ron, have a great evening. Thank you very much. We appreciate you guys and gals tremendously. Again, don't hesitate to contact invest@originclear.com. And we have the contact information for Ken, who has some great briefings to give you if you are a current or prospective investor. So do take full advantage of him, because he loves being taken advantage of.
I'm leaving that alone.
Thank you all. Have a great night, and we'll catch you next week with Tom Marchesello's report. I promise we'll have it done.
Good night.
Good night.
Good night, everybody.